Hi everyone. So today I want to start a new series or set of episodes about the financial news. It's something I want to try to do probably every week, maybe not every week, but just to go over what's going on in the financial world, from taxes to software to different business things that are happening. So today, those are the three areas we're going to cover. And to start us off, we're going to start off with tax. And if you see me looking around, I have a couple monitors and I'll be reading off of things. So if I'm not looking at the camera the whole time, that's why. So, forgot to put up my lower third right there. So there we go. Financial news with David Walston. That's me. And let's talk about tax news. So tax, I grabbed two articles. I don't want financial news to be very long, so feel free to let me know if you have anything you want me to go over in the comments below, or you can tweet at me, and I'll have my handle and everything in the comment section or in the description below on the video. So today we're going to talk about a couple things in tax. We're going to talk about the change in the kid and other dependent taxes for 2018 with the tax update. Hopefully you guys have heard a little bit about that. We'll go into a little bit of detail, and I'll add some articles for that. And then we're going to talk about the Manafort trial, and why we're talking about that really has nothing to do with the person on trial, but the reason he's on trial. So let's take a look at this article from Kelly Phillips. She's a tax attorney, and she writes articles for Forbes, and I really enjoy her articles. So this one is the one she talks about kids and other dependent changes. So the big two changes that are happening in the world of taxes for dependents is personal exemptions are going away. And if you want to read the article, I'll link it below. But for 2017, each individual you reported on your tax return got a personal exemption of $4,050. And so for a family of three, with exemptions and the standard deduction, you were at just about $24,000, a little over. She does the calculation here. It's $24,850. And so for 2018, the standard deduction is $24,000. So it looks like you're losing out on about $800. And so if you think about it, if you have more people than just three in your household, if you have up to five, and she does that calculation down here, you would have in 2017 a standard deduction with exemptions of $32,000, and for 2018, you're only getting $24,000, which seems like a huge change, and it is. It's a big change. And so what the IRS and not really the IRS, what Congress did to make sure that wasn't affecting families to offset that change is they increased the child tax credit. It went from $1,000 to $2,000, and then they also made it so that you can get a refund. $1,400 of it is refundable, and of course there's a phase out, which starts at, for married people, $400,000 of adjusted gross income, and then for singles, $200,000. So over those amounts, you may see a reduction in the child tax credit, or it might go away completely. But the other issue that people will face is if they claimed people who weren't their child, like family members, or just people who didn't qualify for the child tax credit under the old law, they wouldn't still qualify for it, and so you wouldn't get that additional $2,000. And so what Congress did is they added another tax credit. It's not a child tax credit, but it's kind of like that. It's for other dependents, and people are calling it the family credit, and it is a $500 non-refundable credit. And so that hopefully will make up the difference between not getting that exemption amount of $4,500 or $4,050 from 2017, and for 2018 getting just the standard deduction. So hopefully the $500 will make up for that. So that's pretty much what I want to cover about the changes in that. And onto the Manafort trial. The big thing with this is, and the page doesn't want to load. There it is. He is on trial for, looks like, I think 20 counts of different things. But the main two reasons he's on trial are the main reasons the things he's getting charged with are related to taxes. And there are two main issues here. The first one is he's getting charged with different sections related to not reporting income. So he apparently did some work or had some connections with people in foreign countries and was paid some money, and the IRS said, you should have reported it. And he was saying that it was a loan, and they're saying it's actual income. And so they're charging him with several counts of not reporting income for several different tax years. And then the other part is they're charging him with tax fraud because they think he knowingly did that. And then the other part of the fraud is he failed to report his foreign assets. So on your tax return, there's a part here, if you have any interest income or any other type of income, they want you to fill out this part 3, foreign accounts and trusts. And depending on what you have and how much you have, they may ask for more information. But on the tax return, all you have to do is say, yes, I have them, or no, I don't. And there's only 3 questions, so it's not that hard. But he said no, he didn't at all, and he did. And so those are the 2 main things he is getting charged with. And so the point of bringing this up is not that I don't know Paul Manafort, and I don't really care. But what I do think is interesting is that the IRS does go after people for not reporting things on their tax returns. And a lot of times, even criminals who they can't find criminal charges for, like drug dealers and stuff like that, they can't get them on criminal charges for, doing murder or, things like that, or selling drugs. They will actually get you with tax charges. So it is always good to make sure that you know what's going on in your tax return, and because when you sign it, whether or not you got it prepared by someone, you are responsible for all the information on your tax return. You are solely responsible. Your accountant or your CPA who put the return together has some accountability for that, but in the end, you are the one held accountable. So, just one point I wanted to make with that. So, let's talk about software. A couple software updates I want to talk about today, and they're about this. They're related to my favorite software vendor, Xero, and they did some interesting things over the last month or so. They purchased a software firm that does document management, and then they also have partnered with a new payroll service, so that the current solution they have for their clients is no longer going to be used at all. Beginning the end of this year, starting next year. And so let's take a look at that real quick. So Xero is one of the best online accounting solutions out there, and they recently purchased Hubdoc, which is another great solution for accountants or bookkeepers or anyone running a small business, because what it is it's a digital filing cabinet. You just send documents to it, and it will file them based on vendor and everything, so it reads the documents. It's really smart in that way. So they just recently purchased them, which is awesome because I love Xero. And so the integration between Xero and Hubdoc will be even better, and you'll be able to see where your documents are and what they're doing between both softwares really easily, which is really cool. And then the other thing I wanted to talk about was Gusto. So Gusto is one of my favorite payroll providers. They have good rates. They're pretty straightforward and standard. And Xero, if you've ever used their payroll service, it's okay. It's not bad. It's not great either. But moving to using Gusto exclusively for Xero will be awesome, because Gusto is amazing. They allow you to do everything you need to do on their online platform, and they provide all the tax filings and everything automatically and take care of all that kind of stuff for you. It's really great. So I'm excited about that change. And then moving on to business news, and there's just 2 articles I want to talk about there. The first one is dealing with Tesla. So I don't know how many of you follow Tesla or even care about Tesla or Elon Musk, but he had recently tweeted about taking his business Tesla private. So it is currently a public entity, and so I wanted to talk about it from the CPA's perspective of taking a company, the cost of being public versus private. And so I was doing a little bit of research on that, and there's a firm. Let's go to here. Of course. Now you want me to log in or something. That's great. There it is. I can get what I need anyway. So a consulting firm, Provitia, I guess. They calculated the average yearly cost of compliance with SOX. And Sarbanes-Oxley Act, which is SOX, was implemented in 2002 to help prevent fraud from large companies who are large public companies. And it really hasn't, from my opinion and from what I've seen, has not really done its job. It's all it's done is increase compliance cost. So right now, the average cost is between $650,000 to $1.5 million in annual compliance cost for organizations, depending on how many locations you can have. And I'm sure there's a ton of costs still missing from that for labor and other things, but still, if just straight off the top, if Tesla were to go private, Elon would be able to save probably close to $1 million annually, not taking into account any of the other benefits of going private. So the only reason really to have a public company is that as an owner, if you started a business, you want to be able to get your value out of that business. So like Facebook, they went public, and now because they're public, it's a lot easier for the people who started a business and have a ton of stock in the business to be able to sell it and sell it for cash and actually do some other things with those investments. Where as a private company, it's not as easy to sell your stock. And so that's the real advantage of going public, is as an owner to be able to go from owning, either 100%, 75%, or even 50% of the company, dropping your ownership percentage down a little bit and making a ton of cash. But going public is a pain in the butt because of the compliance cost. And the Public Accounting Oversight Board, which is in charge of pretty much all the regulations around public accounting for GAAP and everything, they like to change things a lot or make small tweaks. And so they've added a bunch of cybersecurity standards now because of all the leaks and stuff like that. And honestly, none of them are going to stop the leaks or stop people from doing terrible things with cybersecurity, but they're going to increase compliance cost. So being a public company, unless you have a really good reason for it, like Facebook or one of those companies who as an owner, you want to be able to get some of your money back out of it, or you're just big enough that the compliance cost doesn't matter, then might as well. But I don't see a lot of reason for most businesses, unless you want to be bought by someone, to be public. And from my understanding, Tesla doesn't want to be bought. So I think it's an awesome idea for them to go private. And then the last thing I wanted to quick hit on is the recent Supreme Court ruling with Wayfair in South Dakota, I believe, and how we're going to have to, as small business owners, you're going to have to really watch if you sell products, whether or not you sell across state lines and what states you sell to, because every state is going to have different sales tax rules, and most of them will have a threshold where that you have to sell a certain amount of goods in their state for you to have to start collecting sales tax. But some of them are going to be pretty low and some of them are going to be pretty high. And so I just wanted to quick remind everyone that if you own a small business, you will probably start having to collect sales tax if you sell a substantial amount of goods in a different state, even if you have no physical presence there. So that's the quick news update for today. That's what I ran. Wow, tongue twisted. So that's kind of what I want to do about every week, is grab some news stories and talk about them a little bit and give you my perspective on them. So feel free to let me know of any news stories or anything you want me to cover, or you would want like a CPA's opinion on, in the comments below. Let me know what you think. If you like this episode or this video, or you like this platform or this kind of idea, let me know by either give me a comment, give me a thumbs up on the video, or subscribing. And thanks.